I do think we get a significant bounce off of this 20,000 Pierce level. And again, I mean, the obvious one that everyone was talking about was the 20,000 high from 2017 here. It was just sub 20,000. We did pierce that. That's very normal. So if you're a new trader or someone that doesn't understand this, everyone, once we got close to 20,000, everyone started to say, okay, it's going to 20,000, and then that's going to be the low. So what ended up happening is investors bought just above 20,000, which created us, if you remember before he pierced 20,000, it kind of stayed there for a little while and bounced a little bit. And then everyone else put their stops on their long positions just below 20,000. Inevitably, the way markets work is it's going to flush out those weak-handed longs, meaning it's going to go below 20 and they're going to freak out. They'll dump because they get scared. And it's also going to take out those stops. And then once you do that, then it can finally get a bounce. So again, if we're looking at the chart here, you can see a clear level right here. It did pierce. Now it's back above. One of my favorites is this one. It's called a measured move, and I use it in technical analysis all the time. If you take the distance from this drop, and you can see this was pretty much a vertical drop. This is where Terra Luna collapsed. This is about a $14,000 drop on Bitcoin. If you take the high here and drop 14,000, you actually get the almost to the penny low right there. And again, that refers to a measured move, meaning this drop is equal to this drop as well. You then take into account you have this pivot low right here. You got a nice reversal green candle. And my guess is Bitcoin has upside to about 25,000, maybe 28 to 30,000 over the next 2 to 4 weeks. At which point I do think, like I said, we have one more leg down to go, which would take us into this 12,000, 13,000 range. So again, somewhere in this vicinity is where I'm looking for it to go next. But again, I am long right here. I am a buyer of Bitcoin. I was buying when it pierced 20,000, and I do expect to make some money, and hopefully it gets back to at least 25 before the next leg down, in which case I'll be looking to buy around 12,000 as your next target. Because it always bugs me when people are like, oh, he's such a bear. He hate, like I'm a huge bull on it. I just wasn't going to pay up at 65,000 when all my charts and all my probabilities were telling me it was going to go to 20 or sub 20,000. I would much rather save myself that spread. And then by the time I get back to 65, I'm up 200% on the trade, while some people are just getting back to break even. And I think that's important to understand is that the best traders in the world are never bulls or bears. They're never perma bulls or perma bears, right? Perma meaning they're always bearish or always bullish. The best traders are just looking at the charts, and the charts tell us what the probability of the move is going to be. So when we see a high probability setup, whether it's up or down, that's when we take the trade. And again, it could be up or down, doesn't really matter to us. We just want to be on the right side with the highest probability. So in looking at long term, I think there's a huge need for Bitcoin. I think that, again, if you look at what the Federal Reserve has done, I know we'll talk to Fed in just a minute or two, but the Fed is pulling back on liquidity. But at some point, it's going to cause the U.S. to go into recession. It's going to be such a nasty recession, and inflation will naturally come down in a recession, as I think oil will come down. You'll see that because lack of demand, and therefore inflation probably comes down to 4 or 5%. When unemployment gets to 8 to 10%, the Fed is going to say, okay, now unemployment, which is our second mandate, is much worse than the inflation. So we need to go out and print more to save the economy, right? So the ultimate cause here is more printing of money will come in eventually. And Bitcoin is the solution. It is the digital gold. I think that you're seeing so many big names adopt it more and more every single day that inevitably I do see 100,000, 500,000, maybe even 1 million on Bitcoin, maybe 5-10 years out. And I am a huge long-term bull. But I've always been someone who relies on the charts. The charts are really the purest form of truth we have as investors. And then human emotion kind of clouds that, right? So people get overly bullish and they just believe in it so much that very many people don't want to hear that it could come down. For me, I just look at the charts and I may not want it to come down either, but if the charts are saying it, it is what it is, So one of the things that stood out to me is that historically, when people get so bullish on anything, and I've been through the tech bubble with the dot-coms, the 2007 bubble, I've seen bubbles in oil and collapses, and you notice a kind of a pattern developing. And what that is when everyone gets to this kind of loud, crazy, kind of hyped up bullishness, it's usually near the end of a run.
You can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stablecoins, because when Bitcoin outperforms, it's generally when the markets are falling. And in which case, you shouldn't own Bitcoin. You should just own stablecoins. And when the markets are in a bull run, generally, the alts outperform, particularly the large alts. So like Ethereum. At that point, you should own those. And maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this. The cycles are going to be important occasionally, because you don't really want to sit for 2 years not making money. You might be able to make money in other stuff. But, generally speaking, you want to keep some into it. Some people will keep all into it. I won't. I will take some off the table and do other stuff. And I will then look for the time to get back in again when I think it's going on its next move. Now, maybe we've eliminated the cycles altogether now, and that it's smoother and it trades sideways for 2 years. That's possible too. I don't really have a view, but I won't be 100% my net worth the entire cycle. That doesn't make 100% sense to me. Buying an asset is saving for future consumption later. And you want the asset to go up over time, and then you can consume more. So you buy a house, and then you hope to sell it when you retire. And you hope it's gone up more than the cost of living. That's why we have assets. The problem is that wages aren't affected by this monetary printing. All the variable stuff like corporate earnings and wages don't change. They move a bit by the rate of CPI inflation, because a lot of them are referenced to it, but they don't change. But the cost of assets keeps going up. So your future self is getting poorer because you can't afford them. So what you're doing is destroying future wealth, future consumption. Now, why crypto has been so important, I've been pounding the table over, is because it's fractionalized. You can have 10% of your net worth in Bitcoin, and I can, and we're all on an equal footing, right? That is the game changer here. It gives people a chance to not get left behind. Or do you want to buy one share of Amazon? No, I want to buy a basket of shares, but I don't want to have the whole S&P. I want to have these stocks. Well, suddenly I need 25 grand. Well, I don't have 25. It's like, we've got to help people more, and we're just not. And Wall Street is so busy pushing back against change. If it just stepped back and said, what do people need? It would change its view on everything. So would the regulators. You're allowed to go to Vegas, do whatever the fuck you want, but you're not allowed to invest in a security? Are you insane? Who are you helping here? You're helping Wall Street because they can pull their money for you, and then you can invest. Yes, it's okay to play with these small ones, but you need to know what you're doing, or just take a very small position and realize that you're hugely speculative. You're trading penny stocks, and they can go bust at any time. Or you can build a proper portfolio and think about risk management and understand that not all of them will work as well as you want, but you're going to only get involved in the top 30 or 40 coins, and then you may take an individual bet because you particularly like Audius or something like that. That's okay, but don't go looking for penny stocks to try and get rich, because it's proven that virtually nobody ever gets rich from penny stocks. Generally, they end up in prison or broke.